of empty canvas among the streets of bliss. I know someday you'll have a beautiful life. I know you'll be the sun in somebody else's plane. All right. Good morning, everybody. We got sound. Happy Tuesday. Hope you're feeling better. Mida. You guys ready to go? I'm a little slow today. Mondays are hard for me. All right. I'm just doing up my sleeve. Got to be dressed proper for you. I want to look pretty for you. What did it do to you, Degree? All right. 3, 2, 1. Hit it. Good morning. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Jigga, 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 Slim Shady. Good morning. Hey, my name is Wayne. Nice to meet you. I'm a currency trader just like you. I love currency trading. I don't know what it is. Just like it. Love it a lot. So whenever I listen to news, I always translate it into where is the money going to go? There was a guy on Bloomberg this morning, was pounding 2 energy drinks in the shower this morning, and had Bloomberg radio going, and some guy, some expert with an outrageous British accent was saying, oh, well, you know, it's all about the French banks. The Fed led the money to the ECB, and the French banks borrow it and give it to emerging markets. And I'm like, you'll be shocked at the balance sheets of the French banks. I'm like, what is this guy talking about? But that question is, where does the money go, right? The Fed printed money because there was a liquidity crisis. There was a shortage of dollars. Well, who owed all the debt in dollars? Well, a lot of emerging markets, because they tend to borrow, right? So, like, for this guy to say it's a French bank problem, like, come on, dude. Every bank on the planet was borrowing dollars. And, of course, you're going to lend it to people that want it. Who needs it? Well, emerging markets, right? So, anyways, it's just funny. I'm like, don't let his accent fool you. Oh, it's the French banks. So, anyways, our job is follow the money. Money's going somewhere, and when that happens, appreciation. When the money leaves, depreciation. So that's what we need to figure out. If you don't understand fundamentals, that's okay. We'll get you there. But you can still use long-term technical analysis like 4-hour charts and daily charts. I don't tend to go weekly and monthly because then it doesn't incorporate any fundamentals, right? So I don't like that either. But whatever works, bro. So we'll cover that today. We'll do gold, we'll do oil, we'll do Bitcoin, we'll do dollar pairs, yen pairs, all that kind of pairs. Lots of things going on in the world. And it's fabulous to have a community like Forex.Today so that we can gather and share ideas. So we should thank the sponsor of this YouTube community, and that is Traders Way. Thank you very much, Traders Way. Throw your diamonds in the sky, y'all. Throw your diamonds in the sky. Traders Way is a boutique foreign exchange trading brokerage firm that would like to earn your loyalty and respect. So visit tradersway.com, open up a demo account, download MT4. You can have an ECN account for MT5. You can have an ECN account for MT4. You can have a fixed spread. You can have a variable spread. But the bottom line is when you pull the trigger, the execution speed is fast, the spreads are narrow, or if you have ECN, the commissions are small, and the swaps are amazing. So, tradersway.com. Let's get on with it. Shades of empty canvas. All right, cool. I'm trying to fill the void there. Okay. Morning, Sure Trade. So, what do you think? Trending up, trending down? Well, you can use anything you want. You could say, well, 21 is above the 55. I tend to probably look at it this way. The 21 is above the 55. It has been technically bullish since the 5th of March. That's one way of doing it. Or you can go back to this and I say, okay, is this bullish or bearish? Well, you can measure the rise over the run. Seems to be more up than down. Okay? For every up candle, how many up candles are there? So rise and then run. Rise, run, rise, run, rise, run, rise, run. Right? That's all it's measuring. And then standard deviation. Whatever. All right, cool. So you could just say, I don't know, right? I might not be a smart man, but I know what a trend is, right? You're like, well, that seems to be up to me. Cool. Now, then you add a trading strategy to that. Up, 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 down, down. Let's get rid of this mic. How about that? It should still be good. All right, so how about this? Up, 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 down, down. 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 And look at this. What's going to happen in the next 24 hours? I don't know. But what would you do if this happened? That's tomorrow's buy zone, which we know today. Which we knew this yesterday. We knew that day here. We knew here, there. We knew there, then. What do you think of that? Well, Lira getting crushed, okay? They might have a lot of debt. It might be the French banks. Don't blame Turkish banks, blame the French banks. Which one did I take? This one. Now imagine that. Dollar strong, but South African rand stronger. What? Crazy, huh? Check that out. La, la, la. La, la, la. So, let it run, boy. Okay, oops. What is the target? The target is got to be below 18. Okay, because last time I sold it at 18, it dropped, or 19, it dropped to 18. Okay, and now what? Okay, where do you want to go? The line in the sand is 1760. So let's just say 1750. Why not? So I'm short at 19, go for 1750. Cool. 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 Nice. Oh, for sure. Emil says 1746. That's outrageous, Emil. But 1750 maybe. Okay. And what is that worth? So I have 338 and I'm up, what, 500 pips? For a little more than that. So it's half, right? So 150 would be worth 750 bucks. So I'm halfway there. So if I get that, it's $750 plus interest, which is, you know, $2 a week, but it's something, on a $100 investment. That's the part I like. So right now I'm up 350% return on investment. And is that, I forgot to look, is that pound still open? All right, so I'm basically at break even on that pound yen. Okay. But this is, so you can see total margin 224. At least half of that is pound yen. So, let's say that this one's 110, but I'm up 330. So 300% return on investment. Cool. That's how you do it. Now, of course, this is my coaching account. So if you were doing a professional account, you would have a lot of trades open because you're doing what, between 5 and 20 trades a day. What happens if you only make 1 trade a day or 2 trades a day? You won't make the pips. If you're really good, you'll have a high winning percentage and no money. Doing the reverse fibs. You're going in fib wars? Well, lots of small trades, right, Eric? So what I'd like to see, so sometimes when I'm sort of, for lack of a better word, scalping, but I don't really scalp, as you know, but I mean, if I'm sitting here for the next 12 hours, I'd like to have 10 trades open. Now, they're all kind of doing the same thing, but lots of little shots. Little one, jam the stop, right? Right? Like a little one, put the stop. Now another little one, put the stop. Another little one, put the stop. Another little one, put the stop, right? And if if 2/3 of them break even, do I care? Or I like little losses. So if 2/3 of them are -3 and 1/3 of them are plus 100, am I happy? Yes. Is my winning percentage awesome? No. But my average loser is small and my average winner is huge, and I'm a rock star. I mean, it's a 2 or 3 a week. Okay, now that is pure swing trading, which is fine, of course. Yeah, it's each trade has a lot of risk associated with it, right? You know what I mean? I'd rather have, but like, it comes down to time, right? So like, Mida, excuse me, she may only want to make a couple of trades a week, and that's that, because that's the type of trader she wants to be. She wants to have a little more fundamentals. She wants to spend a lot less time in front of the charts, right? And she wants to catch bigger moves and let them run longer and collect interest and do all those things. And that's right. The downside to that is, every trade may end up being 1 or 2% of the account, right? Because you got less trades, so your account size may end up getting bigger than someone that takes 10 trades a day, right? But the thing is, 10 trades a day, because each trade is small, you're spreading your risk, right? So my 10 trades might be the same as one of Meta's 1 trade, right? And that's fine, except I'm spreading my risk out 1/10 at a time. But anyways. Prince says, is that why some people throw 5 or more mini lots at the same? Well, there's other ways of trading, like where you take a trade and you put 5 here, and then you have various stops or something, and various targets. See, I think that's overly complicated. If you're going to sell that, sell it and manage the risk. But that's I don't personally scale in and scale out. That's all. Okay. When I pull the trigger, I have a reason. Okay. sometimes I feel like that some people, and I mean gurus here, other gurus, and I haven't really seen another guru, but I can imagine it's taught in such a way that it makes logical sense, but at the end of the day, it's because the guru doesn't know what's going to happen. So they're like, well, to manage your risk, you're going to scale in, scale out. It just seems to me like if you're going to sell here, sell there. Okay? If you're going to sell here, sell there. You don't need to scale into this. I mean, you're selling a lower high. You see the moving averages crossing, and you're, in this case, risk off trader. So, you got a monthly swing, you got a weekly swing, you got a follow up. Like, you don't have to scale in. Okay? And then when you see people that do this, and if you do this, I'm not picking on you. I'm not being mean. I'm not criticizing. I'm just showing sort of my opinion. When people have like a target, because let's say one limit at 50, one at 99, one at 150, they're making arbitrary targets based on how many pips they're making. But the market doesn't give a damn about how many pips you're making. The market doesn't even see how much pips. Like, your number of pips are irrelevant to all market participants because they don't see it. But what they do see is where the obvious exits are. Okay? So if, for example, your first target is 72 pips away, why would you get out with 50? Because you're psychologically attached to 50? Well, that's dumb. If it's worth 72, get the 72, right? And then if you're going to do 2 mini lots here and have 2 limits, then do the other one. So let's say your first target's M1, your second target is S2. Okay, then do it that way. But, get in logically, get out logically. Don't get in and out of trades. Like, don't get out of a trade because you have 100 pips. That's got to be the worst scenario, because if you're that right, it's probably worth 200 pips, right? Yeah, so Mida says she scales in her entries to make sure it's going to... So I call that tiptoeing in, but at some point, it is going your way, and when you add to it, you're not tiptoeing anymore. Or you can skip the first one and take the second one. Okay? So anyways, cool. Okay. So here's one we have. Okay. What do we call scenarios like this, where you got one big candle, you got a doji, and then you got right? Of course, it's more important to see this. Oops, I guess let me redraw this. The bigger one is this, this, and this. Okay, the lower low is really what we're looking for. So there's 2 things when we look at a chart like this that you should pay attention to. Let me maybe draw it this way. Let's get off of here. Let me draw it with the... Okay. This is what the live trading group talked about 2 nights ago, 3 nights, Sunday night, whenever it was. Okay, that line is important to me. And I guess for sure, I might argue a little higher than that. Well, let's argue a little higher than that. All right, so let's go on to a 1 hour chart. Okay, so one of the things we discussed yesterday in the live trading group was if you get below this number, which we did, you're technically a bear and you want to sell high. Going for the higher low. Lower high, lower low. Okay. We looked at this on a number of different currency pairs. This idea that at some point we're technically bears again, and you're looking to sell. And you can only sell at resistance. And you can only sell lower highs and all that kind of stuff. And you have to go, across the pairs, right? The second line is the next sort of last chance for bulls, because that's the previous day. So, for example, to remind you how I did this line, this is yesterday's low. Okay, let me make that thinner so it's more realistic. This is yesterday's low. And if you're a bull, you don't like lower lows. And bears love lower highs. So a bear's going to look for a lower high. Okay? And now this is the previous day's lowest low. This one I'm using a real body, which means a bull can now down here think about going long if they want to try, but that's going to make them nervous, right? And anything lower is just like, yeah. So like this could allow a bull to take a day or two off and come back later. And, right? And this would be your first tiptoe, if you will. Okay. Now this is risk on. We need oil up. Okay. And we need the risk on to weaken the dollar. Okay? And look at the logic here. How crazy is this? Bounces just above 140, collapses just above 141. Okay? That's it. It's really, at the end of the day, not terribly complicated. The thing is, I think the most difficult part of this is for you to stay with your bias. Okay? So if you were a bull and you bought this, this is all right. I just don't like buying the lower lows and such. But if you bought this as a bull, okay, that's fine. What you missed was the lower low, and bears saw that, and they took that. But now if it bounced back up, now the bulls will feel vindicated or confirmed at least, right? And the bears look bad. But either way, my point is, and my message to you always is, there is no right or wrong. If you're a bull and you're set on buying this, and you don't care that it's a little bit lower low, you're like, well, I'm looking at this on a longer time frame. That's the central pivot. I buy central pivots, right? Then okay, cool. Okay, that is the right thing to do if that's what you want to do, and you have reason. Like, for example, if you're a bull, that is support. You can buy that. There's no right or wrong. It's just you're fulfilling. Right? You're doing your job. And as a bear, that's proper too, because you could argue that that's a Fibonacci, right? If you're doing it this way, that's a Fibonacci. And then if you argue the lower low, you're going to look for a lower high. You're going to defend the 141, okay? And that is also correct. Right? You guys see that? When you're dancing, each partner has certain steps to do. Your left foot goes forward, their right foot goes back. Okay? Everyone's got a job to do, otherwise people are going to get hurt. So if you're a bull, that's fine, but what we talked about yesterday in the live group and the day before, like even the day before when we were up here, we talked about how to use an oscillator to confirm a rollover so you can catch this. Okay? But you're not technically a bear until we breach this, which again we talked about on Sunday. And then we get this, which sets that, and that's really good if you happen to be a bear. There's nothing here that says you should be a bear. That's what fundamentals are, or at your very least, your best educated guess. The only point is having the bias, even if it's a flip of a coin. I swear to you guys, if you don't know how to figure out a fundamental bias, flip a coin. You will do better simply because you have a bias. Bulls are going to trade this all day, all week long, all month long. And bears are going to do this all month long, Both are going to make money. Whoever gets the direction right based on what the rest of the market thinks will make a lot of money. And those that only are correct short term but know when to stop will also make money, just not as much. Why? The vast majority of market participants don't agree with that bias. But the thing is, you lose money in the middle when you don't have a bias. But a bull's going to catch that, a bear's going to catch that, and everybody else loses. Okay? It's all about the bias. Even if you're wrong, you'll probably make money. Not a lot. But like, here's a question. If you're a bear and all you did was sell lower highs, would you make money? Doesn't matter how much, but you'd do better than break even, right? So, right? So if you sold here, all right, you were correct for a couple hours, 2 hours after that, so 4 hours later, you got knocked out of break even. And then you sold that, and for 1, 2, 3, 4, 5, 6 hours, you were correct, and then you broke even. Okay? And then I think this is something in here. So maybe you took that. But again, you also recognize that you're a seller in an up movement. So really, you could do nothing. But you might take shots, especially on smaller time frames. And it didn't work out. You're like, I'm going to try it here. Like Maida said, tiptoe in. I'm going to take a small trade and try to roll this over. Okay, you were only not wrong for 6 hours. Here you were not wrong for 6 hours. In fact, you were profitable for most of the 6 hours. Same thing, if there was a shot there, maybe you took it, but you recognize it's dangerous. You recognize it's dangerous, and then, whoa, dude, game on, right? Do you know what we were talking about here? You know what we're talking about here? Bulls eat grain, bears eat meat. So anyways, soon as a bear sees this, followed by 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 this, and then the macro of that, okay. Okay. And do you have to be that smart? No. You have to be one. Because if you know, okay, if you have this plan days and even weeks, you know what you're looking for. You'll find it. You'll know this is higher risk. You'll know this is your opportunity. Okay? Cool. So we'll see where we go from here. Obviously, the next issue is going to be this $1.40. Okay? We'll see. Like, for example, if you were a bear, would you have tried to sell off 140? Yeah, 1,000 times over. Did it work this time? No. So what? Right? You had almost 8 hours to adjust your stop. Come on. Come on. All of Asia, all of London, whatever. I mean, you got it. You got this. And if you lose money on like that's your habit, you lose money on trades like that, that's a very good habit to have. If you sell a breach of 140, a retracement to 140, and you sell just below the psychological of 140, the central pivot on a monthly basis and central pivot on a weekly basis, and you recognized on a smaller time frame a price rollover, an oscillator rollover, a moving average crossover, and then you pulled the trigger and then you lost, that's a beautiful loss. Those are the kinds of losses you want to have lots of, and you want to show people those losses. Right? What does my book say? Take pride in your losses. That's a fantastic loss. Okay? All right. The only boy that could ever reach me was the son of a preacher man. I've been singing that for days. The only boy that could ever teach me was the son of a preacher man. Oh, it's hard to be good. Yeah. What do you think about that? Where's our line in the sand? Well, you first test, and then you should measure, and then you should, respond, whatever, to the measurement. All right, there's not enough information here. Cool. Okay. Okay. This is marking the previous day's high. Okay. So, take a look at this. There's a high. Is that a higher high? Well, I'm not sure if you should go short on USD or Aussie USD, but you should ask your bartender. And if you don't have one, ask your priest. Okay? Check this out. Lower high. Is that an uptrend or a downtrend? I used to be a currency trader. It was a tough racket. My broker manipulated me. The central banks manipulated me. Everybody manipulated me. Okay. Cool. Lower high. Okay. Looking at real bodies here. Trying to catch a real body here. Okay. The only boy who could ever reach me. All right. No. So you'd have to adjust this. This isn't really what I want it to do. Son of a preacher man. So what we're trying to look at is like changes of direction. Okay. So when you start to look at this, it's pulling the oscillator down. Okay. So your choice here is whether you use wicks for your determination or real bodies. The interesting thing about wicks is the market opened here, crashed, and then popped straight back up and ended up higher. So a closing candle like if you just use the real body, suggests it had an opportunity to make a lower low, but didn't make it, didn't sustain it. So obviously, either all the bears got out or all the bulls got back in. But the other part of an oscillator, for example, is the failure to make higher highs. Okay? So these things are important. So like when I use a stochastic oscillator, all I'm asking it to do is say, hey, Stokes, tell me when, first of all, let's just look at the lows here. Okay? Let's just look at the lows. There's no lower low. Now look at the high. Okay? Here was a high, here was a high, here was a high, here was a high, here was a high. This matters, don't you think? The fact that there's a higher low and a higher high. Right? So how do we play with that? What we're looking at here, I don't know if this will work, but okay. We're looking at that. Okay. It was this. Now it's that. Now, of course, see if you can do that on a smaller time frame. Okay. What I like price action. Okay, because it gives you a ballpark. Okay, that's what I like, the ballpark. That somewhere around there, you're a buyer again. Okay, higher high. So what I do is I look left, I drag it across. That gives you a new ballpark. Oops. Somewhere around there, I want to buy. Okay, I love this methodology. Okay, now watch this. New higher high. Drag this across. Summer. Okay, so you're up here now. Up here. When you make a higher high, look left, grab the old one, drag it across. Okay? And then from this, you're expecting a higher high, right? So technically, that's a problem, isn't it? Oh, thank you, Forex Intraday trading, daily trading. You know, I was going to name my first child that, but I went with something else. Which one do you guys prefer? How do you like to do this, guys? This is how I do price action. Do you think a triple bottom here is important? Yep. Higher high, higher low, buy. Higher high, higher low, buy. Higher high, higher low, buy. Not a higher high. Shields up, red alert. Okay. So I anticipate now we stay in this sideways trend, otherwise known as a range. How long do I anticipate being in this range? Does anybody know? Yeah, forever. Wow, you guys are sharp. Didn't even hesitate. Forever and ever and ever and ever and ever and ever and ever until it breaks, right? So how do you trade that? Well, bulls must buy this bottom or they're fearful. And bears must sell this top or they're fearful. Okay? So it'll look like this. Up, 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 down, down, buy. Up, 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 down, down, buy. Remember, leading indicator. When we were just at this high, we looked left and dragged it across. So we knew a day and a half to catch it on the retracement. Up, 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 up. So now you look left. You knew two and a half days. You knew this would be support. Down, down, buy. And you didn't get your up, up. That freaks the heck out of bulls. So you're really seriously thinking about taking profit. Okay? Down, 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 down. It's at support. You're a bull. You understand we're not trending anymore. So now, see, like when you buy here, you expect a higher high and then a higher low. You expect that, which therefore you expect a new higher high and then you expect a new higher low. And then you expect a new higher high and then you expect a new higher low. And then you didn't get it. So now what? You expect to buy it here and you expect to take profit there. It's still support. It's still not bearish. Okay? But your expectations have changed. What do you think, guys? What do you think? That's a leading indicator. Okay? And what do I mean by a leading indicator? The first part is you recognize this has made a higher high. Let me change the color. You recognize this has made a higher high. So while we're in the higher high, you do this. You mark this. What does this tell you? We made a higher high. You expect a higher low. And you say, well, it's way down here. And since this is a 4-hour, it's probably going to take all of Monday, all of Tuesday, and all of Wednesday. But you're a swing trader. And you actually kind of want that so you can buy it low. So now you know what you want to do 3 days from now. You're like, yeah, somewhere around this area, I'm a buyer. Okay, this is your standard hammock 1, 2, 3 reversal pattern. Absolutely standard operating procedure. Okay. So then it drops and you buy it here and you make a new higher high. What do you expect? In the future, a higher low. In the future. So you're like, well, I think I'll look left. This used to be resistance, so maybe in the future it'll be support. But you're like, but this is a 4-hour chart. This may take a while. And it looks like it took a day and a half. Then you get to the price you want, and then you buy it. Okay? You buy it at support because you're a bull. Everything is golden. Now you find yourself in a new higher high. You're like, oh, look, a new higher high. I'm profitable 3 trades in a row. Notice that each one is probably an entire week. So now you expect a higher low in the future. Okay? So you're like, wonder where that'll be. So you look left. This used to be resistance. You drag it across. La, 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 la. So you say, well, if it drops around this area here, it used to be resistance, so it'll be support. So it took 4 days this time. And then it went, but did not make a higher high. Is that technically relevant? Oh, faux show. That's why it's a leading indicator, because the whole time we're thinking 3 days in advance. We're thinking 3 days in advance. Well, 2 days in advance. We're thinking 4 days in advance. Now, if you understand that, and I know what you're thinking. You're like, well, if you knew it was going to go up and buy it, and then you knew it was going to come down, you could sell it, right, Wade? Yeah. Oh, and you could sell it, make money there. Yeah. And you could sell it there and then buy it up there. Yeah, the problem is you're not that good. Maybe talk to me in 10 years. Okay? Talk to me in 10 years. And now you're thinking, how dare he tell me how good I am or I'm not? How dare he? Well, I'm giving you advice. Slow it down, bro. This is a get rich slow scheme. I'm trying to teach you skills like patience and discipline and fortitude and planning and strategy and research and behavioral finance, macroeconomics. And you're like, no, I just want to get rich. And I don't need any of that fundamental mumbo jumbo. Just, where's the next trade? Where's the next trade? Good luck with that, bro. Good luck. Okay? That's like someone learning how to bake, but they're not patient, so they skip a bunch of steps. We don't need eggs. Oh, instead of milk, I'll use water. Instead of butter, I'll use oil. And then you throw it into the oven, and you're like, I don't have time for this, so instead of 350 degrees, we're going to make it 500. What ends up happening? Well, okay, yeah, Javier, what does a Lamborghini cost? $3,500, maybe $4,000 a month? You got $4,000. You can go lease one. And then you can live in your mother's apartment. You can live in the spare bedroom at your mom's house. No, but dude, anyone could lease a Lamborghini. If it was that important to you, you could make that happen. I'm certain of it. Okay. If that was important to you, I'm certain we could do it. You could put that down as a goal and it can be accomplished. I'm absolutely certain of it. If you have a goal, you write it down and create a strategy for it, I'm certain you can achieve it. Most people are just dreamers. They do nothing. Okay? Okay? So like when I was a kid, I'd get college loans. I'd take my college loan, which was supposed to go to books and paying for classes. So I don't know if they do this anymore, and I'm just shocked. But I'd get a check for several $1,000s. I can't remember what it was, but it was for the semester. So I had to pay for 5 classes, so I'd stand in line at the university and I'd pay for classes. Well, I had the money. Like, why didn't the student loan people just pay the school? But I guess because it's federal and whatever. So they'd give me the money and trust that I'd actually pay for school. And probably they didn't even care, right? So whatever. So I was supposed to pay for school, then I'd pay for books and pay for lab fees, and I think they gave me a little bit to cover living expenses, right? So I went to car auctions and I bought cars. Sometimes I'd buy 12 cars, which is a problem, by the way. How do you drive 12 cars home? I had a small business running off my student loans. The thing is, the government would give me money. It had to be more than 10 grand. I think, yeah, so imagine this. They gave me like 15,000 bucks. No, that couldn't have been right. 12 grand. Let's say 12 grand. The government sends me 12 grand for the next 5 months of school. Okay? I'd buy a whole bunch of cars at car auctions. I'd flip them, double my money, buy more cars at car auctions, flip them, double my money, and then go pay for school. Right? So if you have half a brain and a ridiculous, sickening work ethic, if you can get your hands on resources, you'll make money. But you have to have a plan and a strategy and make sacrifices and effort. So I'd give up weekends and all kinds of stuff, but that's what I would do. Pretty cool. Yeah, right on, Javier. So now I depreciate an asset when I buy a car for $500 and sell it for $2,000. Now I had to pay the drivers and I had to clean it up. Sometimes I had to get smogs. Almost always I'd pay a couple $100 to have it detailed, the seats shampooed, the floor shampooed, the paint polished, the engine clean, steam cleaned, right? I'd have it tuned up, anything that needed fixing. I've painted doors, and all that kind of stuff. And if any parts needed to be replaced, I'd do all that. Okay. But the point is, guys, if you plan ahead and you dedicate something that is important, if you need to buy a Lamborghini to feel like a success, well, in this case, get a Lamborghini, you could do it. I know you could. You're just going to have to make sacrifices and make it work. If you need to live in your mom's house so you can afford $4,000 a month for your car, so be it. So whatever. Cool. La 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 la. So we got some movement here. Risk off. Okay. Yeah, you're sure, Javier. That's what I know what you're saying. I'm just saying if that's important to you, whatever it is, if it's important to you to buy your mom a house, buy your mom a house. Let's work on it. Let's manifest that. Let's turn it from a dream into reality. Okay? So, what is this line in the sand? Okay? That is Monday, Sundays, Fridays, whatever. Friday's lowest low. So there were two things that were likely to happen here. Okay? Up, 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 down, down, buy, up, 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 up. Knowing that that line that we have here is the last chance a bull has. And that's what we talked about on Sunday at 5 p.m. Like, that's the last straw. Sometimes I call that the Alamo, your last fallback position. If you're going to be a bull, you have to be a bull there. Now, we definitely had bears in the group. What was the percentage on Sunday, guys? Was it 2/3 of the live trading group was bearish? Was that right? Ron says, yeah, it was 2/3 bearish, and especially Meta. Right? Yeah. And you know what was fun about that? The week before, we had all of this move, and we were joking like, Luke is going to make money on the way up, Meta's going to make money on the way down. And that's exactly what happened. That's a lesson. Just be one or the other. You cannot be both, because what happens is you miss this, then you get in this late, and then you miss this, and then you get in that late, and you're caught in the middle like a pig. You're not a bull, you're not a bear, you're a pig. If you're one or the other, you're always looking ahead. Right? Like trend traders, like I just taught you, you're always looking ahead. You're not interested here because you bought down here. You're interested in this. You're ahead of everybody else. And those without biases just noticed it made a higher high. So they buy it, and then it comes down. And then they're like, well, I guess I'm supposed to sell it. But no, you're buying back. Okay? So those without a bias are the ones that are actually selling people their entries. If you're a bull, they're the ones giving it to you, right? So anyways, you always got to be ahead of the market. And if so, you're a professional. If you're behind the market, you're an amateur. Okay? How did I determine that? That was just this low. Okay? So anyways, this was bullish. If you were going to be a bull, you had to be a bull. What we talked about is if it goes lower than that, there's not going to be a bull now until this lower area, whatever we had. Okay? Okay? So was it roughly 133.26 or something, guys? No, 133.40. So we said on Sunday, if it drops below 133.40, you're a bear. Or another way to say it, if it drops below 133.40, stop being bullish for now. You'll get your opportunity later, but that's not cool. Okay? That's all. That's all it is. Shades of empty canvas. Okay? Now, these pivots are set up for a bull. Let me show you why Meta waited a week to sell this. Okay? She was waiting for a sell zone. Sell zone, sell zone, sell zone. Okay? Now, the way we had it before, it was the opposite. It was very, right? But imagine you were thinking ahead. So maybe this doesn't work out. Let me try it again. Let me put it back. Okay. When you were down here, bears were looking up here. Probably eyeballing 135. I don't think people were eyeballing this unless it was a monthly. In fact, let's just check that. I forgot that we had a monthly rollover. Okay, yeah, that makes much more sense. So when we were here, which was Thursday, we knew there were two places a bear wanted to sell in May. That's the first price, and this is the second price for the month of May. To say it differently, even when we were down here, and down here, and down here, this was set up for a bear as a sell zone. So, bears were sitting around going, I hope it rises. I hope it rises. I hope it rises. I hope it rises. I hope it comes up to this 135-ish area. I hope it rises. Why? Because they're either going to sell 134 and take it down or 135 and take it down. And that's thinking ahead. Sometimes weeks in advance. Right? And I believe Meta waited that long. Weeks, like 2 or 3 weeks, waited. Not right? She couldn't confirm market conditions. Couldn't confirm market conditions. Couldn't confirm market conditions. And then finally got a decent price. And then what? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And that's what a bear is looking for. Okay? Here it is. Okay? How about this? Okay? What do we call this? Head and shoulders, right? Up, 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 down, down, up, 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 up. Whoa, 100% retracement. Lower high, lower low. 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 Lower high. All right, we're consolidating now and I'm paying the penalty. It's because we're back into this zone from before. Okay? So this day trade I took had more to do with the breach below the other support that we had identified. I guess it was about here, right? So the real thought is, oh, I wanted that blue. The real thought is, you know, down to here was the potential. So I'm selling at 33, trying to catch 32, maybe get lucky. Because, like, if I don't expect much from this, but I do expect 132, I'm thinking, all right, I can pick up 100 pips on this. But if I don't need the 100 pips, right, I can jam my stop here and say, hey, man, if this is the bearish move, what's going to happen? It's going to do this, and now I'm going for 300 pips, 500 pips versus a lousy stinking 100 pips. And by the way, this is pound yen. You can easily lose 100 pips on pound yen. Easily. That'll be the easiest 100 pips you've ever lost. Therefore, if you trade this and make less than 100 pips profit, you should be embarrassed. Because you took the risk. If you could easily make 100, then to make this work out, you need somewhere between 150 to 300 pips to even justify taking the risk. So you're like, I made 28 pips on the pound yen. You a fool. Okay, that's no good. No good. So anyway, so I've sat on this day trade. It's not really working out, so I'll probably have to bail on it, but whatever. Okay. Rawr! Bears eat meat. Protein! Give me some protein. So we're in this battle of risk on, risk off. If you're risk on, great. There are opportunities for you. So I just went through the methodology by using real bodies of daily candles. Okay? And we had a plan A here for bulls. And if we breach that, take a walk. I think those are the actual words I used. Take a walk. You're done. Then your second opportunity is your plan B. Okay? So imagine knowing here on Sunday, if it dropped below there, take a walk, probably take the whole day off. And if it drops down to this 68 level, now start your research on a smaller time frame than a 4-hour. So imagine knowing you could take the whole day off because you're probably going to lose money if you trade. You guys get that logic? Imagine knowing not to trade this at all. I guess, you know, I should do it this way. I like doing it this way. So my MT4 as a special tool for erasing. Let me just erase the data. So looking at, looking at this, let's delete all that. Okay. Okay. So you said, I want to buy this. 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 But you don't buy it because there was never a trade. So you're like, okay, I'm going to take a walk, take the rest of the day off. Okay, that's it. I'm going to take the rest of the day off. And you're like, I'll set an alarm. Okay. I think Ray set an alarm too. I think Ray had 2 alarms on this one. Anyways, so you set an alarm. You're like, all right, when it comes back to this price, I might be interested in buying. You're interested here, didn't get a trigger. So you're like, take a walk, done. Better than losing money, better than wasting time in front of the charts. So you set an alarm. You're like, okay, well, if it comes down and tickles 68, I might be interested. Okay. Okay? Yeah, there you go. So, now what? So, you take a look at this. You don't pull the trigger on a 4-hour, but actually, let's do the logic of this first. So, over the course of 12 hours, is that enough time to put together a strategy, guys? Do you have 12 hours to set up your trade? Or do you have to be the fastest trader in the world scalping? Let me show you like the secrets of swing trading, for example, right? And if you like this stuff, I invite you to join the live trading group that covers day trading and swing trading, both weekly and monthly. Okay. You ready? Okay. Over the course of 8 hours, we stopped making lower lows right on top of our line. The psych level being 68. On the 12th hour, the good Lord gave to me yet another not lower low. But what did it give us? 5 golden rings, ba-dum, bum, bum, right? It gave us a higher high. So what does an oscillator do when you stop making lower lows, stop making lower lows, stop making lower lows, but make a higher high? What would a stochastic oscillator do? Yeah, it'd cross up. That's how it works. That's the actual math of a stochastics. You're asking it to say, hey, Stokes, I want you to measure lows and highs relative to the few candles. And however you adjust it, you can adjust it any way you want. So mine is 853, so it's very sensitive. I'm a very sensitive stochastic oscillator guy. So, right? So what I look at is relative to the last few candles, is it making lower lows? Yes, so it's heading down. Relative to the last few candles, is it making lower lows? Yes. Relative to the last few candles, is it making lower lows? No. Relative to the last few candles, is it making lower lows? No. Hasn't made a lower low in 12 hours. But it has made a higher high, because that's the other half. Has this made a higher high? No. 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 Has this made a higher high? Yes. And no lower low. So it rolls up. Relative to these other candles. Okay? Now, the reason I say if you're going to trade successfully, you must have a preset bias set on either fundamental analysis, long-term technical analysis, or a flip of a coin. But the secret sauce here is not the oscillator. It's not reading the candle. It's not candlestick patterns. It's not these moving averages. It's that you were waiting here to buy, and it didn't work out. And then you waited a whole day And then you saw this over the course of 12 hours. You're so patient. You're so disciplined. You give strength to shy people so they can get out of bed and do what needs to get done. That is how patient and disciplined you are. So that when this happens, you recognize it and you're like, dude, I've been waiting a day and a half for that. That's how good you are. Now, how do you follow that up? Well, let's talk technicals. I've already covered it today, so this will be a good flashback. Let's review price action lesson today. There's your higher high, bro. The one that rolled over the 4 hour. What do you do with a new higher high? What do you anticipate? And by the way, if you just logged in, you need to go back about 45 minutes, and I'm breaking this down minute by minute. What do you expect, guys, once you have your new higher high? Higher low. So what's the next step? If you're expecting a higher low, so you can buy, you look left. Okay? There is your buy zone in the future, and you're expecting what? Up. Nice! Okay, now what? You got your new higher high. What are you expecting in the future? Higher low. So you're going to want to mark that. Right? Where's your old resistance? In here somewhere, right? It's a guide. It won't give you perfection. It'll give you a guide. It says somewhere in the future that you might want to buy there. And you go, pa-chow. And you're bullish all day long. Double bottom, higher high, higher low. We call this a 1, 2, 3 hammock. Okay? Higher high, higher low. And what's going to happen now in the future? If it makes a new higher high, if we do go up here, ladies and germs, what do you expect to happen next? Higher low. Where are you going to do that? Where are you going to expect that in the future? Well, if we're higher than this old resistance, resistance becomes support, what I call a role reversal, and you'll probably buy this in the future, and you're the world's greatest trader, and not only do you drive a yellow Lamborghini, but maybe you can move out of your mom's house, get out of the basement, for example, and live in your dad's RV. Thank you, Sammy. Yeah. And that's how you predict the future accurately every single day, or you take a small loss when you're wrong. But it's people that are chasing prices that are getting their butts kicked. I have to follow up with him today, Highlander. I'll probably have to wait until tomorrow, though. But I'm going to try to get to it today. So I'm running into final exams at school. I had my final negotiation with 6 different groups. There were a potential of something like 20 variables that we had to negotiate. And the mathematics of that's like, there's hundreds of different results you could possibly get, right? From 6 people negotiating 20 variables. And I got the highest mathematical score possible. Yeah, boy! So I'm pretty happy with that. So in my last week of school, I have a 5-page, no, I think it's 6 plus research, right? So I have a 6-page paper. I have a 4-page paper. I have a 1-page paper, a 1-page paper, a 1-page paper, and a final exam all this week. Like a 2-hour final exam all this week. So I have 10, so I have probably close to 20 pages of papers to do, which requires thought and research. So that 20 pages, I'm a slow writer, so it takes me 2 hours. So that's 40 hours. Then I have to prepare for the final. So yeah, it's going to be an awesome week. I'm super excited. Easy. So I just have to find 60 hours this week that I don't have. But the good one thing, if you're in school as long as I am, you're really good at faking it. You can bust out a crappy paper that looks brilliant. You can do it, right? So anyways, we'll see. So yeah, so where am I going to, yeah. So I am, that installer is important to me. So if you don't know what I'm talking about, on MetaTraders right now, I give you all the files, and I think it's pretty easy, right? Put the profile, put the profiles in the profile folder, put the templates, in the template folder, put the indicators in the indicator folder, and 20% of people just can't do it. And I think what they're doing is they're dragging zip folders in and dropping it into the indicators, and they're like, it's not working. Well, no, dude, you have to unzip it. But anyways, because you can't download them all, so whatever. So if people can't figure it out, some people can't figure it out, and it's not their fault. So I've invested time and money into having an installer developed so that now in the near future when you go to MetaTraders, you'll log into your download area and it'll say, what you got, MT4 or MT5? And you're like, oh, I got MT5. You go, click, and it'll say, which MT5 do you want this installed in? You're like, Trader's Way. And it says, okay. And it goes, installing 228 files. Hit complete. You are finished. Reboot your MT4 and you're golden. So anyways, that's what's happening. And the MT4 one's already done like 4 days ago, and I haven't had time to test it. No, absolutely not, Millie. So the issue is when we're in those groups, we're setting up trades. And yeah, I do some coaching and teaching, but I can't explain what an M2 is and why an oscillator cross is interesting. You have to take the courses. Yeah, if you haven't done the courses, you can't come into the group, for sure. Okay? For sure. And plus, the courses are 80% off. I mean, it's, right? So, yeah. Well, then don't join the group. No, forget it. I'm sorry. If you don't understand what I'm talking about, I don't have time to train you on my methods or my communication style. And I don't want to even risk the other people of me slowing down the thought process. So no, if you're trying to, it's already 80% off. Like if that's right. Yeah. So if that's like a hindrance, no, either way, it's just not right. Okay. Put it this way. There's no, it's not that. Don't twist it that way. It's just, look, you got to understand my language, for example, me. Let's just say I'll make it a me. You got to know me. And that's the best way of doing it. That's all. We'll call it a prereq. Yeah, it's just a prereq. I'm not saying you're dumb. I'm not saying you're uneducated. I'm not saying you don't understand how to trade. You just don't understand me. And that's all, right? Cool. Look, you still got to pay the money, dude. Sorry. You got to take the courses. And by the way, we got like something ridiculously awesome coming up in June with the live group that's going to blow the doors off everybody. But I'm jacking up the price on those courses soon. The COVID-19 is over, right? Right? Yeah. So that 80% discount's going away, guys. Very, 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 very soon. As soon as I have time to cancel it, I'm canceling it. So it's probably, let's say Tuesday, my finals, I'm done with school, right? I'm done on Tuesday, so probably Wednesday that's gone. So there's 1 week left. And then we're changing things and I'm making announcements. And if you're already in the group, like for example, our live trading group that I run, my swing trading group, went from 1 meeting a week to 1 meeting every single day, and I didn't change the price. Think about that. I only did it for COVID-19. And then I lowered the price for all the training videos by 80%. And I did all of that because of isolation. Everyone here has been isolated for the weeks and weeks and weeks and weeks. As soon as that shelter in place was enforced, I dropped the cost of the training videos by 80%. And then in the live trading group, increased the amount of time I spend with the group, something like 500% without changing the cost. So that is the best I could do. And now prices are going to go back up now that we're going back into the real world, and people are already in. They already got it. They're already in. And then we're going to make some really blow you away stuff very, very soon. Very, very soon. And so if you're in, you're going to benefit. Cool. Thank you. Okay. Or you could just be here every day. Look, or you could just be here every day for free. I'm here every single day, and I don't hold back. I do my best in these webinars to teach you and show you this is possible, that there's methodologies that you can learn. I'm trying to get your head screwed on straight psychologically so that you can be a successful trader and not sort of like some kid trying to get rich quick, but more like an adult building a real skill and building a real business. Like I really put a lot of that in there, and it's completely free. Make sure you visit tradersway.com and open up a demo account. So it's not free money-wise. You really should pay it back and make Traders Way know that this is important to you. You should leave comments on every video, leave thumbs up, likes on every video so that you tell YouTube this is quality content. So it's only free in the sense of money, but I believe, the way I was raised, is you still have a responsibility. If these daily webinars are important to you, you're telling YouTube this is important to you, and you're thanking Traders Way and telling them this is important to you. It just doesn't cost money, but I give you a lot, and I do my best, and I love being here every day. You're very, very, very important to me, but make sure you pay it back. Because people are investing time and energy and money into you right here in this free webinar. Okay? So thank you guys, is all I'm trying to say. Thank you. So it might be free, but I think you also have a responsibility. What time is it? It's getting pretty late. Sorry, I guess the stock market's opening, right? All right, well, I guess that's it. If you need resources, all the links are in the description below, to the book, to Traders Way, to the training courses with the discount, to the live group, to whatever. There's tons and tons. Oh, to my chart templates. All those links are down below. Whatever you need, I'm trying to provide it to you. What you need and how you need it, depending on your mode, whether you like reading, you like watching, you like doing, all those resources are available to you. So whatever. Get what you need. Thank you for being here. Make sure you subscribe, please. I will see you at 5 p.m. Eastern Time if you're in my live group. And if you're a subscriber of Forex.Today, I will see you tomorrow at 8 o'clock in the morning, New York time. Thank you for being in my life. I hope this makes a difference. and I will wish you the best. Peace on earth. May the pips be with you. May your profits be above average.